Question 1. Commercial auto policy. A Colorado business owner has a fleet of delivery trucks and wants to ensure that his vehicles are covered under commercial auto policy. Which of the following coverage options would best protect the business from claims related to accidents caused by the business's employees while driving the trucks? A. Garage keepers coverage. B. Motor carrier coverage. C. Business auto coverage. D. Workers' compensation coverage. Answer: B. Motor carrier coverage. Explanation: motor carrier coverage is specifically designed for businesses that transport goods or passengers for hire. It provides liability coverage for bodily injury or property damage caused by the insured's business vehicles, including those driven by employees. Garage keepers coverage is for businesses that store customers' vehicles. Business auto coverage may not address the specific needs of a motor carrier, and workers' compensation only covers employee injury, not vehicle liability. Relevant law: Colorado commercial auto insurance regulations require businesses to have appropriate liability coverage, especially for vehicles used commercially. The Motor Carrier Act enforces specific regulations for businesses transporting goods or people. Question 2. Scenario-based professional liability insurance. Scenario: Mr. Rodriguez, an accountant in Colorado, is being sued by a client for providing incorrect tax advice that led to significant financial penalties. Mr. Rodriguez has errors and omissions EO insurance. However, he did not report the potential lawsuit until 3 months after being notified by the client. His policy specifies that claims must be reported as soon as practicable. Given this delay, what is most likely the outcome regarding coverage? A. The claim will be denied because Mr. Rodriguez failed to report it promptly. B. The claim will be covered, but Mr. Rodriguez will pay a penalty for late reporting. C. The claim will be covered without penalty as the delay was under 6 months. D. The claim will be denied because errors and omissions insurance excludes financial advice. Answer: A. The claim will be denied because Mr. Rodriguez failed to report it promptly. Explanation: errors and omissions insurance policies typically operate on a claims-made basis, meaning the claim must be made and reported within the policy period or as soon as practicable. In this case, the failure to report the claim promptly may lead to a denial, as delays can hinder the insurer's ability to investigate. Late reporting violates the policy's condition, potentially voiding coverage. Relevant rule: claims-made policies, such as EO insurance, are subject to strict reporting requirements under Colorado insurance laws. Failure to comply with reporting deadlines can lead to claim denial, as outlined in many professional liability contracts. Question 3. Workers' compensation insurance. Which of the following types of employees is not typically covered under Colorado's Workers' Compensation Act? A. Independent contractors. B. Full-time employees. C. Part-time employees. D. Temporary workers hired through an agency. Answer: A. Independent contractors. Explanation: independent contractors are generally excluded from workers' compensation coverage as they are not considered employees under the Colorado Workers' Compensation Act. Full-time, part-time, and temporary workers hired through an agency are typically covered by the employer's workers' compensation insurance. Employers are responsible for ensuring workers' compensation coverage for employees, but independent contractors must secure their own insurance. Relevant law: the Colorado Workers' Compensation Act specifies that businesses must provide workers' compensation insurance to employees, but independent contractors are not considered employees and must self-insure. Question 4. Excess and umbrella liability insurance. How does an umbrella liability policy differ from an excess liability policy? A. Umbrella liability only provides additional coverage for auto and homeowners insurance policies. B. Excess liability policies offer broader coverage than umbrella policies. C. Umbrella liability policies offer broader coverage and may cover gaps left by underlying policies. D. Umbrella policies exclude all professional liability risks. Answer: C. Umbrella liability policies offer broader coverage and may cover gaps left by underlying policies. Explanation: umbrella liability policies provide coverage beyond the limits of underlying policies and often include broader protections that can fill in coverage gaps, for example, covering risks not included in underlying auto or general liability policies. Excess liability policies only increase the limit of coverage for specific risks without providing additional or broader coverage. A relevant rule: Colorado insurance regulations recognize umbrella policies as providing more flexible, comprehensive coverage than simple excess liability policies, are often a key consideration in business liability planning. Question 5. Workers' compensation insurance. In Colorado, which of the following benefits is not typically provided under workers' compensation? A. Disability income benefits. B. Medical benefits. C. Funeral expenses. D. Punitive damages for employer negligence. Answer: D. Punitive damages for employer negligence. Explanation: workers' compensation in Colorado provides several benefits, including medical care, disability income, and funeral expenses for work-related injuries or deaths. However, punitive damages, which are intended to punish an employer for negligence, are not covered under workers' compensation. These damages can only be awarded in separate lawsuits, not as part of workers' compensation claims. Relevant law: under the Colorado Workers' Compensation Act, coverage is designed to provide immediate compensation for work-related injuries, regardless of fault, but does not include punitive damages, which are reserved for cases of gross negligence or misconduct outside the workers' compensation system. Question 6. Homeowners insurance. Which of the following is not typically considered personal property under a Colorado homeowner's insurance policy? A laptop used for personal purposes. B. A built-in kitchen cabinet. C. Furniture in the living room. D. Clothing in the bedroom closet. Answer: B. A built-in kitchen cabinet. Explanation: personal property generally includes items that can be easily moved, such as laptops, furniture, and clothing. A built-in kitchen cabinet is considered part of the structure of the home, real property, and is therefore covered under dwelling coverage, not personal property coverage. Relevant law: homeowners insurance policies in Colorado distinguish between personal property and real property, with built-in fixtures being part of the real estate covered under dwelling protection as regulated by state insurance laws. Question 7. General insurance concepts. What is the primary function of the law of large numbers in insurance? A. It helps insurers predict individual losses more accurately. B. It enables insurers to calculate the likelihood of large losses. C. It allows insurers to estimate overall loss costs by increasing the size of the insured pool. D. It ensures that premiums remain low for individual policyholders. Answer: C. It allows insurers to estimate overall loss costs by increasing the size of the insured pool. Explanation: the law of large numbers is a fundamental insurance concept that states the more similar units an insurer covers, the more accurately it can predict overall loss levels. This principle allows insurers to spread risk more effectively and set appropriate premium rates. It does not predict individual losses, but it helps estimate aggregate outcomes over time. Relevant rule: Colorado's insurance regulations, like those of other states, are based on principles that include the law of large numbers, ensuring that insurers can maintain financial stability by accurately assessing risk across large populations of policyholders. Question 8. Workers' compensation insurance. Which of the following injuries would not be compensable under Colorado's workers' compensation system? A. A construction worker injured while operating machinery. B. A retail employee who slips on a wet floor during their shift. C. A delivery driver injured in a car accident while making deliveries. D. An office worker injured while driving to work in their personal vehicle. Answer: D. An office worker injured while driving to work in their personal vehicle. Explanation: workers' compensation generally does not cover injuries that occur during an employee's commute to and from work, as this is considered outside the scope of employment. However, injuries sustained while performing job-related duties, such as driving for work or being injured on company property, are typically covered. Relevant law: Colorado workers' compensation laws exclude coverage for injuries sustained during normal commutes, often referred to as the coming and going rule. Question 9. Commercial general liability (CGL) insurance. Under commercial general liability (CGL) policy, which of the following would typically not be covered? A. Bodily injury to a customer caused by a falling object in the store. B. Legal defense costs related to a defamation lawsuit against the insured. C. Property damage caused to a rented office space by the insured's negligence. D. Bodily injury to an employee during work hours. Answer: D. Bodily injury to an employee during work hours. Explanation: injuries to employees are typically covered under workers' compensation insurance, not a CGL policy. A CGL policy covers liability for bodily injury and property damage to third parties such as customers or clients, but excludes injuries to employees, which require separate workers' compensation coverage. Relevant rule: Colorado's insurance regulations maintain this distinction between CGL and workers' compensation coverage to ensure proper allocation of liability. Question 10. Flood insurance. Which of the following statements is true about the waiting period for National Flood Insurance Program (NFIP) coverage in Colorado? A. Coverage begins immediately after the premium is paid. B. Coverage begins 10 days after the policy is issued. C. Coverage begins 30 days after the policy is issued. D. There is no waiting period for flood insurance coverage. Answer: C. Coverage begins 30 days after the policy is issued. Explanation: NFIP flood insurance typically has a 30-day waiting period from the date of purchase before coverage becomes effective. This waiting period is designed to prevent homeowners from purchasing flood insurance only when they anticipate a flood event. Relevant rule: the 30-day waiting period is mandated by federal law under the NFIP, which applies to all flood insurance policies sold in Colorado. Question 11. Workers' compensation insurance. Which of the following is true regarding workers' compensation in Colorado when an employee is partially responsible for their injury? A. The employee's benefits are reduced by their percentage of fault. B. The employee is fully barred from receiving benefits. C. The employee's benefits are unaffected by their fault. D. The employer is liable for punitive damages if the employee is at fault. Answer: C. The employee's benefits are unaffected by their fault. Explanation: under Colorado workers' compensation law, benefits are provided on a no-fault basis, meaning an employee can still receive benefits even if they were partially responsible for the accident. Workers' compensation focuses on providing medical and income benefits regardless of fault as long as the injury occurred during employment. Relevant law: Colorado revised statutes ensure workers' compensation is no fault, prioritizing compensation over determining fault. Question 12. Auto insurance in Colorado. The personal injury protection (PIP) coverage in an auto insurance policy typically includes coverage for all of the following except A. Medical expenses, B. Lost wages, C. Pain and suffering damages, D. Funeral costs. Answer: C. Pain and suffering damages. Explanation: personal injury protection (PIP) covers medical expenses, lost wages, and funeral costs, but it does not cover pain and suffering damages. These damages are typically part of a liability claim in the event of a lawsuit rather than covered under standard PIP insurance. Relevant rule: Colorado PIP policies follow this standard, covering immediate out-of-pocket costs but excluding pain and suffering, which requires separate legal action. Question 13. Flood insurance. Which of the following types of property is not covered under a standard National Flood Insurance Program (NFIP) policy? A. Detached garages. B. Personal belongings in the basement. C. Built-in appliances. D. Structural damage to the home. Answer: B. Personal belongings in the basement. Explanation: under NFIP policies, coverage for personal belongings in basements is typically excluded even though structural elements like the foundation and built-in appliances are covered. Only specific items like furnaces and water heaters may be insured in basements. Relevant law: NFIP policies sold in Colorado adhere to these national coverage exclusions for flood insurance. Question 14. Commercial General Liability (CGL) insurance. A company in Colorado is sued for a product that caused bodily injury to a customer. Under the company's Commercial General Liability (CGL) policy, which of the following is true? A. The policy only covers damages, not legal defense costs. B. The policy covers both damages and legal defense costs. C. The policy does not cover product-related claims. D. The policy will only cover claims made within the first year of policy issuance. Answer: B. The policy covers both damages and legal defense costs. Explanation: a CGL policy covers both damages, such as medical costs and compensation for the injury, and legal defense costs related to bodily injury claims. Legal defense is typically provided even if the claim is unfounded as part of the policy's duty to defend. Relevant rule: Colorado insurance regulations align with national CGL standards, ensuring both damages and legal costs are covered under standard policies. Question 15. Business Owner's Policy (BOP). Which of the following would not typically be covered under a Business Owner's Policy (BOP) in Colorado? A. A customer slips and falls inside the store. B. Inventory is stolen during a robbery. C. A company vehicle is damaged in an accident. D. A fire destroys part of the store's interior. Answer: C. A company vehicle is damaged in an accident. Explanation: a BOP combines general liability and property coverage, but typically excludes coverage for vehicles. Auto insurance is required to cover damages to company vehicles, whereas the BOP covers premises liability, property damage, and business interruptions. Relevant rule: Colorado's BOP policies mirror national guidelines, which separate vehicle coverage from the standard business owner's package. Question 16. Auto insurance. In Colorado, which of the following circumstances would likely not be covered under a standard collision auto insurance policy? A. Damage to your car after hitting a fence. B. Damage to your car in a rollover accident. C. Damage to your car after a tree falls on it. D. Damage to your car from a collision with another vehicle. Answer: C. Damage to your car after a tree falls on it. Explanation: collision coverage only applies to damage resulting from a collision with another vehicle or object. E.g., hitting a fence or another car. Damage caused by falling objects, such as a tree, is typically covered under comprehensive coverage, not collision. Relevant rule: Colorado insurance policies use standard definitions of collision and comprehensive coverage, with comprehensive covering non-collision related damages. Question 17. Workers' compensation insurance. In Colorado, when can an employee sue their employer outside of the workers' compensation system? A. If the employer does not carry workers' compensation insurance. B. If the employee is partially responsible for their injury. C. If the injury involves a third-party contractor. D. If the employer's negligence was minor. Answer A. If the employer does not carry workers' compensation insurance. Explanation: if an employer in Colorado fails to carry workers' compensation insurance, the injured employee may have the right to sue the employer directly for damages in a civil court. Workers' compensation is designed to provide coverage without the need for lawsuits, but if an employer is non-compliant, they lose this protection. Relevant law: Colorado law mandates workers' compensation for most employers, and failure to provide it can open the employer to civil lawsuits. Question 18. Commercial property insurance. Which of the following would likely not be covered under a commercial property insurance policy in Colorado? A. Damage to the building from a fire. B. Loss of inventory from flooding. C. Loss of business income due to a covered peril. D. Damage to office furniture from a broken water pipe. Answer: B. Loss of inventory from flooding. Explanation: standard commercial property insurance policies exclude flood damage, which must be covered by a separate flood insurance policy, such as one offered by the NFIP. Other perils like fire, water damage from pipes, and business income loss are generally covered under standard commercial property insurance. Relevant rule: Colorado policies follow national commercial property exclusions, including the exclusion of flood damage without specific flood insurance. Question 19. Auto insurance. Under Colorado's uninsured and underinsured motorist UMUM coverage, which of the following is true? A. UMUM coverage applies only to medical expenses. B. UMUM coverage also applies to lost wages and pain and suffering. C. UMUM coverage is automatically included in all policies. D. UMUM coverage does not apply if the insured has comprehensive coverage. Answer: B. UMUM coverage also applies to lost wages and pain and suffering. Explanation: an insured and underinsured motorist UMUM coverage in Colorado provides compensation for medical expenses, lost wages, and pain and suffering when an insured is involved in an accident with a driver who lacks sufficient insurance. It covers more than just medical expenses, including broader economic and non-economic losses. Relevant law: Colorado statutes require that UMUM coverage be offered and address both tangible and intangible damages. Question 20. Business Owners Policy BOP. A retail store in Colorado experiences a power outage, and as a result, food stored in the store's freezers spoils. The store owner has a Business Owners Policy BOP. What is the most likely outcome regarding coverage? A. The BOP will cover the cost of the spoiled food. B. The BOP will only cover the food if the outage was caused by a covered peril. C. The BOP excludes spoilage of food under all circumstances. D. The BOP will cover the food only if the power outage lasted more than 48 hours. Answer: B. The BOP will only cover the food if the outage was caused by a covered peril. Explanation: most BOPs provide limited coverage for spoilage, but only if the spoilage results from a covered peril, such as a fire or storm that causes a power outage. If the outage was due to something not covered by the policies, such as routine grid failure, spoilage may not be covered. Relevant rule: Colorado follows standard BOP provisions, which often require the cause of the spoilage to be a covered peril for reimbursement to apply. Question 21. Commercial auto insurance. In Colorado, which of the following vehicles would likely require coverage under a commercial auto insurance policy rather than a personal auto policy? A. The vehicle used for commuting to work. B. A van used for delivering products to customers. C. A personal car driven by an employee for personal errands. D. A vehicle used only on weekends for personal leisure. Answer: B. A van used for delivering products to customers. Explanation: a vehicle used primarily for business purposes such as delivering products to customers. Requires commercial auto insurance. Personal auto policies typically exclude business use, especially if the vehicle is integral to the company's operations. Relevant rule: in Colorado, vehicles used for business activities must be insured under a commercial policy which covers liability and physical damage related to business operations. Question 22. Property insurance. Which of the following best describes how the coinsurance clause affects a property insurance claim in Colorado? A. It requires the insured to cover all losses up to a deductible. B. It penalizes the insured if the property is underinsured. C. It allows the insurer to deny all claims if the property is undervalued. D. It has no impact on claim payouts unless the insured requests it. Answer: B. It penalizes the insured if the property is underinsured. Explanation: a coinsurance clause requires the insured to carry insurance equal to a specified percentage, often 80% or more, of the property's value. If the insured fails to meet this requirement, they will face a penalty and receive reduced claim payouts based on the percentage of underinsurance. Relevant rule: coinsurance provisions in Colorado property policies follow national standards, applying penalties when the insured fails to maintain adequate coverage relative to the property's value. Question 23. General liability insurance in Colorado. Which of the following would not typically be covered by a general liability insurance policy? A. A customer slips and falls on the insured's premises. B. An employee is injured while performing their job. C. A product manufactured by the insured causes injury. D. A third party claims that the insured's advertising is misleading. Answer: B. An employee is injured while performing their job. Explanation: injuries to employees while on the job are covered under workers' compensation insurance, not general liability insurance. General liability policies cover third-party injuries, such as customers or visitors, and claims like property damage or advertising injury. A relevant rule: Colorado law mandates that businesses carry separate workers' compensation coverage for employee injuries, while general liability focuses on external third-party claims. Question 24. Homeowners insurance. Which of the following types of water damage would typically not be covered under a standard homeowners insurance policy in Colorado? A. A burst pipe floods the basement. B. Rainwater leaks through the roof during a storm. C. A sewage backup floods the bathroom. D. A water heater ruptures and floods the home. Answer: C. A sewage backup floods the bathroom. Explanation: sewage backups are generally excluded from standard homeowners insurance policies unless the insured has purchased an endorsement that specifically covers this type of damage. Burst pipes, roof leaks, and ruptured water heaters are usually covered. Relevant rule: Colorado homeowners policies typically exclude sewage backup damage unless optional coverage is added. Question 25. Professional liability insurance. Which of the following professionals in Colorado would most likely require professional liability insurance, also known as errors and omissions insurance? A. A restaurant owner. B. A real estate agent. C. A retail store clerk. D. A construction site worker. Answer: B. A real estate agent. Explanation: professional liability insurance protects professionals such as real estate agents from claims related to errors, omissions, or negligence in the performance of their professional duties. This insurance is especially important for individuals providing specialized services or advice. Relevant rule: in Colorado, real estate agents and other professionals who provide advisory services are encouraged or required to carry this insurance. Question 26. Umbrella insurance. In Colorado, an umbrella insurance policy provides coverage that A. replaces standard liability insurance, B. provides coverage only for property damage, C. extends liability limits above other existing policies, D. covers workers' compensation claims. Answer: C. extends liability limits above other existing policies. Explanation: an umbrella insurance policy provides additional liability coverage above the limits of the insured's underlying policies, such as auto or homeowners insurance. It offers a safety net for large claims that exceed the limits of standard policies. Relevant rule: Colorado insurers offer umbrella policies as an extra layer of liability protection, particularly valuable for individuals and businesses with high risk exposure. Question 27. Workers' compensation insurance. In Colorado, an injured worker receiving workers' compensation benefits may also be eligible to sue a third party under what circumstances? A. If the employer is found negligent. B. If the injury was caused by a defective product used at work. C. If the worker is responsible for the injury. D. If the worker refuses workers' compensation benefits. Answer: B. If the injury was caused by a defective product used at work. Explanation: if a worker is injured by a defective product while performing their job, they can file a third-party lawsuit against the manufacturer of the product while still receiving workers' compensation benefits from their employer. Relevant law: Colorado allows workers to pursue third-party claims in addition to receiving workers' compensation benefits, enabling them to recover additional damages from liable manufacturers or other third parties. Question 20. Inland marine insurance. Which of the following items would likely require inland marine insurance in Colorado? A. Office furniture inside a business building. B. A delivery truck used by a shipping company. C. Equipment used by a construction company at multiple job sites. D. A business owner's personal vehicle. Answer: C. Equipment used by a construction company at multiple job sites. Explanation: inland marine insurance is designed to cover property that is transported or used in multiple locations, such as construction equipment used at various job sites. It provides coverage for items that are frequently moved or exposed to risks in transit. A relevant rule: Colorado insurers provide inland marine policies to cover specialized equipment, tools, or goods in transit which are not adequately protected by standard property policies. Question 29. Commercial property insurance. In Colorado, under a commercial property insurance policy, when does the vacancy clause apply? A. When a building has been unoccupied for 30 consecutive days. B. When a building has been unoccupied for 60 consecutive days. C. When a building has been unoccupied for 90 consecutive days. D. When a building is undergoing renovations. Answer: B. When a building has been unoccupied for 60 consecutive days. Explanation: most commercial property insurance policies include a vacancy clause that applies when a building has been unoccupied for more than 60 consecutive days. Under this clause, coverage for certain perils, like vandalism or water damage, may be limited or excluded. Relevant rule: Colorado commercial property policies follow the standard 60-day vacancy period, after which certain coverages may be restricted. Question 30. Personal umbrella insurance. A Colorado resident is considering purchasing a personal umbrella policy. Which of the following is a correct statement regarding the benefits of this policy? A. It provides additional coverage for property damage only. B. It covers only claims related to car accidents. C. It offers higher liability limits for both property and bodily injury claims. D. It eliminates the need for a homeowner's insurance policy. Answer: C. It offers higher liability limits for both property and bodily injury claims. Explanation: a personal umbrella policy provides higher liability limits that extend beyond the insured's primary policies, such as auto or homeowners insurance, covering both property damage and bodily injury claims. It supplements, rather than replaces, other types of insurance. Relevant rule: Colorado residents can purchase umbrella policies to protect against large liability claims, offering a safeguard for major incidents that exceed standard coverage limits.